Okay, so today we're talking with Alan Dornfest from the Idaho Tax Commission. Alan, thanks for taking the time to meet with us today.
Well, you're certainly welcome. I enjoy talking about property tax anytime.
Well, one of the things I always ask people first is, how did you come to be uh, the property tax guy at the Tax Commission?
Oh, wow. I don't know if I can go into all of that. When I started here, oh my God, do I have to say it? 42 years ago, I had absolutely no property tax experience, but I knew something about research. My original field was in the sciences, and I knew something about statistics and things like that. I also started at a time when there was both a lot of change going on in our political environment with a lot of pressure. There was an initiative, for instance, copied out of California when California passed its Prop 13, which was a major departure for everybody in our universe in terms of how property taxes would be computed. And Idaho very soon after copied that same initiative. And so that became, nobody knew anything about it. So I sort of fell into the role of trying to analyze that for us and study it. And it kind of went from there. Plus, at the time, we had a lot of, the World War II folks were retiring. And so there were a lot of areas for moving in and trying to learn stuff and trying to move ahead. Plus, over the years, what we found is just a tremendous interest from both the public and the political environment, the legislature, and a lot of change going on. So as change goes on, we've again circled back and analyzed and so on, and it's been of interest. It's an interesting field, at least to me. And so I don't know if that's complete enough, but
Oh,
that's
that's
what it is.
great. That's great. And I am relatively certain that no one knows more about property taxes in Idaho than you do. So I think we've
Well,
got the right guy on the phone, as I would say. So in general, how does the property tax work? These are the things I'd like us to cover: how it works, what the significant limitations are on it in Idaho, and what some of the proposed reforms might look like that we'll see the legislature
right.
contemplating.
So if you could, you have my slide pack,
I
and
do.
I would suggest starting with slide number 3 on the slide pack. Hopefully I'll be able to see it too, and I apologize for not having a camera here.
Here we go. That's okay. So let's see. So we're looking at property tax essentials, that one?
Yeah, that one. So I think it's important to understand this from a baseline perspective. And this is all 2019 data. We work on a calendar year basis in property tax, and we're gathering some 2020 data at this point, but we don't have it complete at this time. So it's good to talk about from a 2019 perspective. So the first thing is you have to have a value base against which the tax is levied. It's not a tax on income. It's not a tax on purchases like a sales tax. It's not a tax on property like based on the number of homes or something. Although many centuries ago in England they had a windows tax, okay, based on the number of windows. But that's not really what the property tax is now based on, at least in North America and most of the rest of the world. It's more likely to be based, as Idaho's is, on market value or something like market value. There's a lot of reasons for that. It tends to be an objective indicator. People kind of have an idea of what the word means, market value, even if they're not a technically proficient, appraiser or something. So by doing that, we look at that as the underpinning, the underlining base for our property tax. Secondly, property tax is an annual tax. Again, unlike the sales tax, which you pay one time when you purchase something, property tax is annually determined and annually raises money for local governments in Idaho. And so we determine the base annually as well. It just makes sense to do that. Why should we determine a base? Some states do, unfortunately, from 20 or 30 or 40 years ago, and then use that today for today's tax. So we have to determine that current market value, and you can see what it is here. And it says on the slide, it's not always full market value. There's some special considerations given to certain properties, such as farmland and timberland. We would suggest that those considerations probably protect that, shelter that a little bit, and it's probably a little bit below market value, maybe a lot below market value. At any rate, there was $175 billion of taxable property all over Idaho last year. And you can see from the former year's figure that it grew substantially. And everybody's wondering, of course, in today's backdrop, well, what's happening now? We've got this pandemic going on, our values crashing. And I will tell you that although we don't have a complete study yet, our studies are always as of January 1 of every year. We don't see any evidence of a crash right now. I'm just going to leave it at that. So whether it'll keep going up at the same rate, I don't know. But that's what we had from 18 to 19. Now, the other side of the equation is, okay, that's the value base. But what's the point of all this? Well, it's to raise money for local governments through this tax. Well, local governments then, we don't have a tax rate. No fixed tax rate. A sales tax, you say, yeah, I know the rate, it's 6%, right? I go to the store, I pay this, okay, fine. We don't have such a thing in property tax. We have the opposite. The local units of government in Idaho set their budgets. They may have some funding from other sources like grants and fees and various things, but ultimately they have an amount of budget they need to raise from property tax. And they divide that by this taxable value, this share in their particular area of the 175 billion, and that determines the levy rate. Now that creates, because taxing districts in our state are unique geographic areas, it's not just 44 counties. It's 115 school districts and I don't know, about 200 cities and a bunch of fire districts and cemetery districts and the like. They all have their own unique, to an extent, geographic area. And so the overlaps of those, we have to add up all those levy rates, in other words. So your home is going to pay the rate for the particular sewer district you're in, the particular school district you're in, et cetera, et cetera. That makes over 3,000 different property tax rates ultimately on an individual parcel by parcel or property by property basis. But what we can say about that, and we try to analyze this so to come out with some averages to make sense out of all this, but basically there's a uniform rate for all classes of property. So it doesn't matter if you're a business or a farm or a home. Once that value is determined, it may affect, your value may be changed, but once that value is determined, the same rate is applied to everybody for the school district or the city or the highway district or what have you. But the rates themselves are independent. And we have 1,000 districts. Now there's a limitation. Can property taxes just go wild? Can we raise the budgets, through the roof and so forth? And the answer is no. Generally speaking, budgets of taxing districts are limited to a 3% annual increase plus a component when they have new construction or they annex, they change their boundaries, say to take in a new subdivision or new property. And then if they haven't taken the full allowance from prior years, they're allowed to sort of accrue that in what I call an imaginary bank account, because it's not paid yet. And those are called foregone increases, and they can bring those back into their budget. So that's kind of the basics of the way the tax works. And we can go to the next slide, too. I think I want to continue this if I can for a slide or two. So the tax is levied on what we call most real property. That's things like land and buildings, okay? And it's levied on business personal property. So if a business owns a bunch of computers and chairs and desks and equipment that's considered personal property, as opposed to real property, then that's taxable also, with the caveat that there's a $100,000 exemption for personal property before it becomes taxable. So for a company like Micron, obviously they have a lot more equipment than $100,000, right? And so they are going to end up paying personal property tax, where a mom and pop grocery store with a few shelves and freezer units probably won't get to that $100,000 point, so they won't pay it. Now, the other part of this is division of government responsibility. So the state of Idaho as an entity, and this is true, by the way, nationally in most states, does not receive any of this money. Oh, yeah, $10,000. Okay. It's a weird little aberration within the system. But basically, $2 billion was raised last year for property tax, and it all goes to local units of government, including about somewhere between 70 and 80 million to urban renewal agencies, which is a whole nother matter that we have throughout about half the counties in Idaho. But $2 billion local, that's what's important here. People call me up and they say, how dare you collect more property tax from me? And I go, I don't collect any property tax from you, okay? The other misnomer about it is the county bills the tax, right? The county sends you a tax bill in November. And a lot of people think, wow, the county is taking, 2, 3, 4,000, whatever it is from me. What are they doing with it? Well, the truth is the county as an entity is only getting about a quarter, typically, of that amount. The rest is going to the schools, the cities. We'll see some slides later where we can actually break that out. So those are some of the important misnomers. A, it's not a state tax. B, it's not even all going to counties. Certainly none of it's going to the federal government or anything like that. And it's a local tax. So let me stop there in case you have some questions or want me to move on to a different subject.
There's a point that has confused me over the years, and that's whether there's a limit on the levy rate in Idaho.
Yeah, the answer is yes and no. as
No
as
wonder.
always, nothing's simple, right?
Yeah.
So the levy rates for the individual taxing districts are limited, sort of. It's even more confusing than that because they're limited by line item, budget item within the taxing district's budget. So a city may have a separate budget for its library, a separate budget for its general fund, a separate budget for 6 other things, liability insurance. Each of those has its own limit. So it's hard to say if the city has a limit as a totality, okay? Same with the county. So there are over, I don't know, 800 limits out there. So there are limits, but ultimately we can look at ranges, I think, better than limits. The high number in the state is somewhere around 2.5% of the taxable value of property today. That's about the highest rate I can find of the combination of rates, the city, the school district, and so forth, anywhere in the state, with a low end rate of about 0.3 or 0.4% of value. So those limits, and the other things, Stephanie, is that those limits tend to be not the prevalent limit. The 3% budget cap tends to be prevalent. Why? Because values have far outstripped in their growth this 3% rate of increase. Even if you couple it with new construction, and you might say, well, that 3% might really be like 6% on an average year, but so what? Values have been growing 10, 15% in after we swung out of recession. And so that's dropped the rates. When you grow your value, you drop your rate. And so the rate limits are there, but they're secondary.
And it seems to me, if I recall correctly, that usually the governments that are talking about being at their levy rate limit are small rural units that aren't having a lot of growth. So they're not getting a lot of value adjusted upward.
That's true. And secondarily, certain funds, particularly within county government, are close to those rate limits. Yeah. So the counties have what's called a justice fund for some of those expenses. And I've seen quite a few of those close to their rate limits. Counties have been pushing on the legislature to try to ease up there a bit, so far to no avail. But otherwise I would agree it's the rural and the smaller areas. Other than a county like Blaine, Sun Valley, which is rural, but very special and unique.
Yeah, those resort counties are a little different. So there, we kind of know that a lot of people don't like the property tax, and they complain about it a lot. And that leads the legislature to look at ways that we might limit or change or reform. And I wonder if you could talk a little bit about why are we in this situation where it seems like the property taxes are rising rapidly, and what reforms might be
Yeah.
on the table.
I think we need to look at a couple of other slides for that. Let's cut to slide 9, please.
They are not numbered.
Actually, oh, they are numbered if you look in the lower
Oh, there
corner.
they are.
Yeah.
I'm blind.
Actually, go back one. Go back to slide 8 as a starting point. Yeah, that's a better starting point. So one of our ways of controlling property tax for some people is through exemptions, ours meaning the legislature's way, okay? Exemptions must be statutory to be allowed. And one of the big exemptions, it's about $30 billion exemption around the state, is for what we call primary residential property, a home, not a rental unit that you live in, but an owner-occupied home. And the legislature has, it dates way back to the early 80s when there was a voter initiative to implement really the first major homeowners exemption. But after that, the legislature has made various modifications to it. And beginning in 2006, the maximum of that exemption had been locked in at $50,000. It's 50% of the value of the home and land, an acre of land up to 50,000. It had been locked in from 1983 to 2005, or to 2000, yeah, actually 2005. And in 2006, the legislature said, well, that lock-in, you know, that was covering like fully at 50%, almost every home in the state in 1983, when the average home price was about $50,000. And not covering that much by 2005, when the average home price was probably a couple $100,000. So the legislature tied that exemption lid to the housing price index, which is sort of like a CPI, okay, and allowed that maximum to be adjusted. And you can see from this chart that it went up to a little bit over 100,000 by 2009. Just before the recession hit. And then it did the opposite during the recession years, it dropped. After that, it started going back up again. And then the legislature in 2017 said, we don't like it moving around like this anymore. So they imposed a $100,000 cap. We've seen the number of homes that are now exceeding that cap grow, of course. And it's up to, well, it's probably over half of the whole state, because that would be a home of 200,000, which is modest any longer. And so this is one inkling, I think, of some of the pressure points, because as more and more homes, so if you have a $300,000 home and it grows to 400,000 in value, you don't get any more protection, any more sheltering. Whether you should or not is another argument, but you don't get any. And so as more and more homes get into that boat, I think that's been responsible for some of the additional pressure. The legislature also thought in the early 2000s, like 2006, that school taxes were a major issue. And so they repealed most of the school tax, but not all of it. So today, school taxes are still pretty high, even with that repeal. So that's been a confusing part of the system. You can see the average effective rates here. And I'm going to add here that these rates are low by national standards. And by national standards, we may have time to go into it today, but by national standards, our property taxes are certainly not above the middle, most cases below the 25th percentile, quite low. So whatever people think, they are quite low. Let's move to the next chart for a second, please. So this also demonstrates what's been happening over time. And this demonstrates something that I'm going to call a tax shift. So we break the property into its major sectors in Idaho: residential, commercial, agricultural, timber, mining, and public utilities. Those are railroads and public utilities, a separate grouping. We can see that the dominant sector is residential. And this residential includes both primary, the homes, and secondary up through fourplex. So if somebody is in a small rental unit in a duplex, that's counted in this residential grouping. So over time, we can see that this has been the most, what we'd say, elastic in terms of responsive to different economic change, right? So we saw residential, if this chart only goes back to 2009, but we saw residential take a big hit when the recession hit and drop in value, and then we saw it climb out of that and go up rapidly. Did we see the same thing for commercial, our next biggest sector, commercial industrial? The answer is no. It mirrors it sort of, but not nearly as extensively or as significantly. Or as pronounced of an effect. So with that happening, when one sector, and the other sectors are basically flat lines. So with that happening on the commercial sector, I looked at 1 year's data, 18 to 19 in Ada County, and I think I saw an average of about 21% increase in residential and a 5%, as I recall, on the median increase in commercial. With that happening, the taxes go where the value goes. And so the values all going toward residential, the taxes tend to shift then to the residential property. So that sector picks up more than the other sectors. The same thing can happen when big exemptions are granted to the other sectors. We have some of those. The personal property exemption didn't have that effect, that $100,000 thing I mentioned earlier, because the state decided to backfill it. And pay for the amount being raised by that exemption. But it's been talked about in the legislature, you ask about trends into the future. It's been talked about maybe repealing all of the personal property tax. If they replace the money out of the state general fund, okay, then that's more or less neutral. If they don't replace the money out of the state general fund, then that would too shift taxes to residential property, because residential personal is exempt now. Let's move on to a couple more of these slides because it might be instructive. So primary residential is a subset of residential. These are the actual homes, like the ones eligible for the homeowner's exemption. And it's a pretty large share, 43% of the value statewide. And what did it do? Statewide, not just Ada County, it increased 19%. Now that's a little misleading because we build homes, we don't build farms, right? So when I isolate that out and look at existing homes, I still see about a 15% value increase and about a 7% increase in taxes. We can go to the next slide too. Okay, so this breaks out several sectors within that and shows the other residential and the commercial property. And you can see that there's not the pronounced effect on those categories. They're flatter than the primary residential. So I think that's been a pressure point. I don't know, the legislature has grappled with various proposals on homeowners exemptions and changes and so forth, but it hasn't really adjusted things very much. It's played around the margin. For instance, we can talk about this a little more, but we have what's called a circuit breaker program, and that's for low income, elderly, and certain other groupings. They have that can pay up to $1,300 of somebody's property tax, and that's a state paid thing, so it doesn't come out of the pockets of the school districts or anything like that, and it doesn't shift the tax to other property taxpayers in the various property tax sectors. So it's pretty friendly that way, but it has some pretty tight income limits, which have been modified only slightly over the years, and the benefit amount of $1,300 max, and it phases out with higher income, has not been changed now since '06. Mm-hmm. So there are some issues like that. The legislature has enhanced the circuit breaker to the extent of adding a lot of doubling benefits for certain veterans who have disabilities, things of that nature. But the broad program, which is helping about 30,000 Idaho households today, that hasn't really been modified much in recent years. So that's another point that legislators have been looking at and that we might expect to see some movement in.
Now, I understand only about half of the people who are eligible for the circuit breaker apply. Do you have a sense of why that is?
Yeah, it's a really good question. That's the best we can come up with using census data and like in the American Community Survey and trying to look at income and cross match and so forth. And so I do believe, I do agree with that, that number. I don't know. Some of it I chalk up to awareness, despite some efforts we've made and the counties have made to publicize the program. Not everybody knows about it. It's one thing to be an insider and to live and breathe this stuff, and it's another thing to be out there in the world, right?
Yeah.
And not have heard of different programs. Beyond that, I'm just not sure why some people don't take advantage of it. At least we have 30,000, we have half. To contrast that, we have a tax deferral program too, where people with even a higher income limit than is allowed under the circuit breaker, up to around 40-something thousand in this case, can defer their taxes into the future, into the time they're deceased, and their estate has to deal with it, or they sell the property. And do you know how many people took advantage of that program last year?
I have no idea.
You can't see because my camera isn't on, but I'm holding up my finger, one finger. We had one claimant in the state of Idaho. If I ask my manager of that program, she knows this person on a first name basis.
Yeah.
We had one claimant. I do understand we have a huge increase going on, and we may have 5 claimants this year, but that's unconfirmed, a rumor at this point, okay? But the point is, so there's another deferral program. Could that help people pay their property tax? Of course it can. Again, there's a state fund for that. So it's not taking away from the local districts, yet we have virtually nobody participating in that program. So
well, I have to admit, that's the first time I've heard of it.
It's been around for 14 years.
Apparently, I don't know that one guy who gets that deferral.
Yeah, I think it's a woman, but whatever. Yeah.
So let's see. Let's talk about the reliance. I know you have a lot of good slides on the reliance that local governments have on the property tax. You want to look at some of those?
Sure. So let's move on first to, I'd like to start with slide 13, actually, before we cut to the others. So that just shows the whole state and local revenue picture. Mm-hmm. So understand that when we combine state and local, we do have a property tax slice, right? Whereas normally we wouldn't if we were just talking state government. So this is the picture at the state and local level, all governments put together. And
is this from the general fund or all revenues?
It's all revenues, not just general fund, right? So it shows motor fuel revenue. It shows everything on here. Yeah. I'm wondering, some of the arrows may be misplaced. They are. I'm sorry. I need to redo this somehow. It got out of order here. But the big pies actually are individual income tax, which should be moved up a little bit. That's the blue left-hand, slide or slice. Yeah, and then the sales tax is in the right place. The motor fuels tax is much smaller, so I don't know what's happening with that. Mm-hmm. Property taxes should be shifted to the left a little bit because that's the big slice on the bottom, right? Yeah, so sorry about that. Let's move down a couple of slides. Look at local government finance. One more slide. So on the local government level, property tax is almost 30% of their total. Intergovernmental aid, this is where governments, whether it be the state, which shares a lot of money with local governments, or the federal government, that type of revenue sharing is worth a lot for local government finance. And then charges, 27%. That's fees and charges. Idaho, as opposed to many states, doesn't have really much local sales tax, teeny bit in a few resort areas, and any local income taxes. So those would be the two missing components from here. Let's move on to a couple more slides. Down to, let me see where I want to go. I want to go down to slide 18, please. Yeah, that one.
Okay.
So this is the current use, and we always talk about the big four or big five. And again, somehow things have moved around on here. I apologize, but schools are the largest share at 30%.
Okay.
Cities are at 26. I don't know what's happened over there on that other share. I'm sorry. Counties and cities are about the same, each about a quarter. Highway districts are about 5%. So that should be that blue thing up on the top. I'm sorry, I don't know how that happens. And then the yellow should correspond with all the other districts. That extra 10% that's missing is all of the other fire districts and community college districts and the like. Boise State, of course, is a state entity, and they don't get any property tax, but they did at one point in time because they were a community college district, I think officially until about 1981. As I recall, even though they were also a full four-year institution at that time. But they were listed and they did collect property tax for a time early on.
Yeah, I don't think we gave up our community college function until, what, 2005 or 6?
Oh, is that right?
When
Okay.
the College of Western Idaho was created.
Right.
We gave them the tech college and the, professional technical training.
Right, because there was BJC.
Yeah, well, I can look out my window and see the old, like where they taught the diesel mechanics and all that stuff.
Right.
Yeah.
So the community colleges then, formerly junior colleges, do have ability to raise and do raise property tax, 33 million, last year. But the colleges, the state colleges and universities do not. Mm-hmm. Let's move on to the next one. This is a more detailed breakdown that shows the different types of districts that we have, the 970 that actually asked for property tax last year, and just the myriad of types of districts from ambulance to flood control to everything else. So you just get a feel for it from that.
Yeah, for not liking government much, we like to create little special district governments, don't we?
Oh, yeah, we do. Well, it sort of argues, there's two arguments, right? There's the sort of fiscal ability argument. Are these competent and capable areas fiscally? Sort of the economy of scale argument, I guess, versus the wanting to say, hey, that sewer district, it's only serving one subdivision. Why should it be any bigger than that? It should just be that subdivision, And those are the counter arguments. Do you want things broad across the state? Do you want things extremely localized? And we've gone both ways on this. Our school districts are perhaps the best real indicator, because everywhere in Idaho is covered by some school district, but they can be as small as serving, I believe, 9 students in one case. Drive down to, where is it, Three Creek? Is that near the Nevada border? At any rate, and you'll see a little flag and a little schoolhouse down there, okay? And that's a school district. And as opposed to, what is it, West Ada with 14,000 students or whatever maybe it's more than that, whatever that number is, And so we have all sorts of different, from very small to very large districts.
This number of 115 or 114 is actually, about half of what we had maybe 40 years ago. When did they consolidate most of the school districts?
We're dating ourselves, but that was in the 1950s that consolidation actually started. That was a post-war phenomenon, and I don't know where we went from, but it could have been way over half. It's probably way under half, because nationally it was, thousands, hundreds of thousands of school districts. So yeah, they really were consolidated at that time. We had some vestiges of that into more of the recent times. I don't remember the year, but there was an elementary school district within Lewiston, Idaho, called Tammany. And finally, the Lewiston School District, which is, of course, much bigger, annexed the Tammany School District in and did away with it effectively. That happened under my watch, I think, in the early 90s. But I'll tell you, more recently, there have been splits rather than consolidations. So in Bonner County, there used to be one countywide school district, and today there are 3 school districts in Bonner County. So for whatever reason, whether the north half people don't think they're getting the service of the south half or whatever, there has been pressure toward away from consolidation. Even though the legislature over the years in some areas, such as fire districts and cemetery districts, has passed laws to try to encourage consolidation, it really has not happened, with rare exceptions.
Well, communities are pretty tight on their schools. They don't like to contemplate a change in leadership, a change in the name of the school, all that. So I get that.
Yeah. So I think that's what we've seen. I want to say the other opposite, though, too. Some folks in the legislature have suggested that there's been a proliferation, of these districts in recent years, and I don't see that. There's been a slight but steady increase, yes. Okay, 967 went to 970. Okay, sure. That's fairly typical. Yeah. We're not going to see 1,050 next year or, 1,250. It's not increasing rapidly. But yes, we may see a new fire district because as subdivisions develop, new needs are out there and they can't always be dealt with the existing districts, okay? So I think there is some truth to it, but mostly we just see a continuation of a lot of districts. I don't think I have the chart in this particular slide deck, but I was just looking at another slide deck yesterday that ranked all the states. It's available from the Census Bureau, by the way. And it ranked all the states. Illinois, I believe, comes out first. And they have over 3,000 taxing districts. I will tell you this, we didn't make the top 10. Okay, we probably made just a little below the top 10, okay? We're probably in the top 15, but we did not make the top 10 in terms of numbers of taxing districts.
But I have this argument with Betsy Russell all the time. It's not about the number of districts. I think it's about the number of districts per capita, right? And when you
right,
in that case, we might be competing with Illinois. But point
yeah,
taken.
we might be, but it's per capita, and I would argue you'd have to do a square mile kind of test too, because we're a lot bigger than some states, right?
Absolutely.
But I will say, as a difference. That we see, like Massachusetts, for example, consolidates its school districts by county. Mm-hmm. And basically they're operated, as I understand it, under the county umbrella. So, that model would reduce the number of taxing districts to an extent. I'm not suggesting that that's a model that's been, widely thought of here, but certainly there are ways to consolidate more at the county level, and you could argue that.
Yep, absolutely. Okay.
Yeah.
So you have some slides on tax burden. Did you, or where would you like to go next?
Yeah, let me look at that for a moment. That might be good to cut to. Let me see where that is, because I think it's important to look at where, that's what's happened to school levies, because, it's a good one, because it says that, and that should have, numbers aren't showing up on things. They show up on mine.
Okay.
I don't know.
You can sure see the direction of the line, no matter.
Yeah, that's really weird, because I have actual years and dollars on mine, but okay. I printed it off the same file, Stephanie, but anyway.
Yeah, it could be something about the way it's just
displaying.
Yeah.
So the point here is that when the lower line ends in about 2006, and then it starts taking off. Mm-hmm. And the deal is that when the state took over school funding, soon after, the state went into a horrible recession. and couldn't afford to pay the schools what they had been getting. And so schools went to their voters. And voters, despite maybe having problems with employment and whatever, they stepped up to the plate. And most school districts today have supplemental levies. They can only be passed for 2 years for the most part, so you have to keep doing them. West Ada apparently is in some trouble right now because their big $14 million one didn't pass, and they have one more shot at it in about 2 weeks. And then they won't have that 14 million if not, there's no other way to replace it. So that shows, that's sort of a pressure point slide, which is always interesting, because if somebody promises you funding and then they don't come through on it, you look for ways out, right?
Right.
So the way out was the state originally wanted to take the pressure off of property tax. And then when they couldn't afford it, well, the pressure came back on the property tax.
Right.
So it's
So
another.
to contrast with a bond, just to make sure the students are keeping this straight, the supplemental levies just require a simple majority, whereas a bond that you might pass to build a building or whatever requires 66 2/3% of the votes.
That's correct, but bonds last longer. And I will say that we are one of only 2 or 3 states, I'm not quite sure on one of them, that have the 66% supermajority for bonds. Many states have much lower requirements. But at any rate, regardless, that's also been debated. That would take, we feel, a constitutional change, which is even harder than a statutory change to accomplish. Let's go on to some of the tax burden studies, though. They start on 29.
Okay.
So this is a study, that's done by the District of Columbia, and you can go out to their website and find the study for well over 40 years. It's a great study, and it estimates the taxes on families earning different amounts. And it estimates 3 major taxes: income, sales, and property. And so when you start saying, well, where is Idaho on this? And you see the minus 34 under the 50,000 on the property tax bar.
Yeah.
See the minus? Well, that's actually the income tax, but go over to the right. Yeah.
There we go. Sorry.
And that's where we are in relation, not to the states, but to the average of 51 largest cities. So they take Anchorage, Alaska, and Butte, Montana, or maybe it's Billings, I think it's Billings, whatever, and they compare us to the Boise, to the largest city. But it's still pretty instructive, and it suggests that we don't have a high taxes. It's, again, another suggestion, at least on property tax. Do we have high taxes on income tax? Maybe. That's more arguable from this chart.
Yes. And that's negative 14% even at the 100,000 level, correct?
It is.
Okay.
Yes, that's correct. Yeah.
Okay. And then I see you have the Idaho versus the neighbor states.
Right. And this looks at the statewide. This is not a city one now. And it's from census data. And we look at the taxes as a percent of income. We know that personal income changes from state to state. And so Idaho is traditionally a low-income state, usually about 20% below the U.S. average. So where are we when we take that into account, that some states in our region are higher, or nationally? If you hit 100% on this chart, you're at the U.S. average. If you're at 78, you're 22% below, or 21.5% below the U.S. average, 110 in Montana above the U.S. average. Now, don't read this to mean homeowners or farmers or whatever. It's not sector analysis. It's not what we call incidence. Yeah. There's a difference between the terms here. It's important. So it's looking at our overall $2 billion or whatever in property tax and doing the same for the other states. But nevertheless, it's illustrative.
Mm-hmm. Mm-hmm.
Let's go to the next one. So this is one looking at our overall tax burden, showing that overall, we're not a high tax state. We're more in the middle. We're lower on property tax. And this pattern, I've done this study for, again, a long time. And we always score, more or less about the same. So we're certainly comparable to our neighboring states in an overall tax base and lower than the U.S. average.
Okay.
So here's another way to look at Idaho property tax per thousand of personal income over a long, long period. We were higher in the 1970s.
Mm-hmm.
per thousand of personal income, okay? And then we had this big initiative and freezes and all sorts of stuff I could go into forever. And then it leveled out in the mid-20s. So really, the leveling effect from, say, 2014 to the present is lower than what we had in the 90s per thousand of income. So, are our taxes out of control? I have to leave that to the policymakers, but let's go on. There's also, this chart is per capita, and it's against against the U.S. average per capita. So again, do we always score below? Yeah. Are we even further below than we used to be? Yeah. What can I say?
Yeah. Now, what do we have here? Okay, so
that's looking at a home in Boise based on average sales in 1980 and 2018. And adjusting for inflation. And have we had an increase in real terms? Yeah, we have, about 1.6% per year. People look at numbers, and if their tax is now $3,000 and they were in the same house in 1980 and it was $400, they look at that and they go, wow, this is just out of control. But in real terms, it's a 1.6% increase per year. I think the numbers are frightening, and nobody knows how to deal with inflation, properly,
I get that.
And so forth. So this is just another chart looking at, again, like that former chart did, what's happening in the different sectors. So the residential sector has clearly been the one with the most growth. So we looked at that before, and that's been historical. You want me to talk about tax relief or the way that the budgets and levies are figured, or what do you want to do?
Yeah, let's talk. I've had you on for a while here. Let's talk a little bit about relief, and then we'll wrap it up.
Okay, so for relief, we go on to a ways down to, let me see. Let's see. Sure. We have limits on budgets. Where are you? 41?
Yeah, I was just guessing. That was where you were.
Yeah. I mean, sure, we can start there. I'm probably going to skip most of these, but we can look at several things. I already mentioned the limit on taxing district budgets, and we talked about levies, so I'm not going to get into that. But exemptions are important, and tax relief measures. I don't know that I have a lot of detail on exemptions, but let's cut to slide 51. Go slowly in case I want to stop somewhere. No, let's keep going. Yeah, let's stop there. So exemptions are out there to grant relief to types of taxpayers, usually based on ownership, but sometimes based on use. The two use exemptions are nonprofit educational institutions and agricultural equipment. Those are based on use. So the same tractor owned by a person doing construction and owned by a person doing farming, it's going to be exempt in one case and not in the other. Okay, because that.
Yeah. Do you have I can't remember, is there a slide that shows, I mean, this is really an immense category in a city like Boise that has the seat of the state government, university, all the big churches and everything, maybe as much as what, 40–50% of the properties?
Well, the truth is, in terms of an overall value, when we talk government and all of that and religious and all of that, we don't know the answer. That was, by the way, my first project many decades ago. And I still have it buried in the file cabinet somewhere. But it wasn't totally successful because what's Idaho? Idaho is 2/3 federal land.
Yeah.
And when you get into that, and we're prescribed, we can't tax federal land, okay, and so on. So you start getting into, the Mountain Home Air Force bases and all those sorts of things. Some of them pay some in lieu of taxes. Most of them don't. And then you talk about state land. Now, the state Fish and Game actually pays some tax, but most state property doesn't. That's because of a constitutional amendment on that. So most state buildings don't. The building I'm in right now was bought by the state. It used to be Hewlett-Packard, so it's not required to pay property tax since it's a state building now. So can you hear me okay?
Yes.
I thought something cut out.
No, you're still.
I'm not hearing you.
Oh, you don't hear me?
Just a second. Are you there?
I'm here. Can you hear me?
I can't hear you anymore.
Oh, it looks good on this end, so I'm
Um,
not sure what's happening there.
I-
Yeah,
Can you hear me? Just
I
nod if you
can.
can. You
Yeah.
can hear me. Okay,
So,
I'll continue, but I'm telling you, I can't hear you at this point for some reason that I don't know why. I'm sorry.
okay.
The life in this mode. So at any rate, we have, let me see if I did something. I don't think I did anything, Stephanie.
Okay.
So maybe you have a mute button pushed or something.
Well, I don't think so, but
I can't hear you.
okay.
Okay, so at any rate, we have a vast amount of exempt properties. We don't know the true extent of it. We track some exemptions that are reportable, mostly ones for economic development. So let's move to the next slide for a minute on exemptions, please. And so the homeowners exemption, I said earlier, was over 30 billion. We do track that one. The spec value exemption was our estimate of how much farmland was probably exempt
Mhm.
under market value. Now, interestingly enough, this last year, the legislature decided that it would recodify the farmland valuation procedures, and we won't be tracking that exemption any longer. So we'll no longer be able to know how much farmland might not be at market value. Pollution control equipment is exempt. That's mostly industrial equipment used for, air and water pollution control. Urban renewal property is not really exempt, but that 6 billion or 7 billion, the taxes on it go back to the Urban Renewal Agency, so it's almost like an exemption. The taxes on the property within a designated area. And then all the other tracked exemptions, again, mostly for economic development, are listed in the other category. But what we don't track are the big things, the religious, the charitables, the hospitals, and so on. Those are just simply not tracked.
Mhm. Mhm. Okay. You still can't hear me? No.
Um,
Well,
I can
we're
keep
running out
going.
of time a little
Running out
bit.
of time. Okay,
Yeah.
let's cut to a couple more slides up. Let's keep going. Over by, I just want to mention circuit breaker again.
Yep.
So one more slide. Let's stop there. So, whoops, yeah, let's stop there. So tax relief measures are out there, and the circuit breaker is an income tested program. Sometimes we have other tax relief measures, like we give counties sales tax money and make them reduce their property tax accordingly and things of that nature. There's in lieu of taxes. So we don't tax solar farms. We have one in Ada County, but they pay a 3.5% gross earnings tax instead, but they're not subject to property tax. Let's go to the next slide. This shows some detail, and that's all I wanted to show here on the circuit breaker program. Perhaps one of the problems with it is it does require annual application, and people are never good about things like that. Even this year, where we extended the deadline to June 15th, we found people showing up on June 16th, And so that's always an issue. But it does provide substantial relief, and I did want to show that, an average of $700 per claim. That's quite a bit. Especially for people who are really low income, below about $30,000.
Yes.
There's no repayment, there's no loss of revenue, it's a grant, so forth. Let's move on. We talked about deferral, and yeah, I like this slide that I put at the end. There's no perfectly equal system, but I will say this. I want to leave with this message, and that is that when I compare the Idaho property tax system to systems all over the country and to an extent all over the world, we check a lot of the boxes that would be considered good as opposed to considered not so good by tax policy analysts. And I'm just going to leave it with that. So for all the complaints and all the issues, we have what would be rated as a pretty good system.
Good. Alan,
I
thank
can't
you for
hear
your
you.
time. I appreciate it.
You're welcome.
And I'll see you when I see you next. Take care.
If you need more from me at any time, feel free to ask.
And you're okay with, I'll leave the slides where they can see them as well. Okay, thank you.
Okay.